Good afternoon, friends. I am a screen. So before they start with this, uh, thank you. So I have a long list of things which I need to speak about. Before I start, I'll start with Nani Palkiwala's quote. The person who says he knows everything about Income Tax Act knows nothing about it. So I do not claim to know everything about it. It is possible that I may have made mistakes in the PPT. I tried to see that there are no mistakes as far as possible. We have a long list other than salary. So we'll start first with recent amendments of Finance Act 2025 about all these sections. We then go on to amendments in return filings restricted to 6 years. We'll discuss 194T salary or two partners TDS. We'll then talk about issues about 194C and J. Then we'll go to issues of TDS on property and rent, and Form 26Q, consequences of non-compliance, and time permit 194R, S, and O. These are topics which I will take up only briefly. There is a session where a detailed discussion is due at 4 o'clock. So Prachi Parekh is going to take it. So I'll not touch too much. I've taken some examples, but time permit, we'll do that. The intention of Finance Act 2025 was to simplify the TDS provisions. Finance Act 2025 enhanced the threshold limits for certain TDS was to be deducted with the intention to simplify the TDS provisions. Reduction in rates in certain cases, benefits to senior citizens, and introduction of new provision to enhance efficacy and revenue collection. So 194T effectively is for collection of tax at the earliest point of time, which is the aim of the tax department. Today, the TDS contributes a substantial portion of the revenue. A few years back, it was 1/3. I think it has already reached 50% of the total revenue collected by the government. And the restriction of amendment of return 6 years, which is going to be a real painful thing for all SSEs. They've not yet realized it. When the department starts collecting old demands, they'll realize that they really don't have any option but to pay the tax. Coming to enhancements of limits, 193 talks about interest on securities. There was no initial limit for the amount to be from where deduction has to be done. Now the deduction has to be done only after the limit of 10,000 rupees. So up to 10,000 rupees, no TDS is to be deducted. 194A, TDS on interest other than interest on securities. This was divided into three parts. There was TDS to be deducted by the banks and cooperative banks and the others. So for banks and cooperative banks, earlier the limit for senior citizens was 50,000. Now the limit has been moved to 1 lakh rupees. Earlier the limit for others other than senior citizens was 40,000. It is now 50,000 rupees. So if you earn interest on FD up to 50,000 rupees, no TDS will be deducted. With regard to the others, so supposing as a private party you are giving interest to someone, earlier the limit was 5,000 rupees, now the limit is 10,000 rupees. Dividend, the limit has been increased from 5,000 to 10,000, 194. 194K income from mutual funds, earlier the limit was 5,000, the limit is 10,000 rupees now. 194B, lottery crossword puzzles, it was 10,000 in a financial year. They've now made it 20,000 per transaction. This is actually to give convenience of a deduction of taxes, because there was no way someone would come to know if I won one lottery and then I go to the next lottery whether I have received 10,000 rupees or not. So this was more of convenience of compliance rather than anything else. So online games is not covered over here. Online games, we'll be doing it separately under separate section. 194D, insurance commission and commission with regard to lottery tickets. Earlier the limit was 15,000, now it is 20,000. Commission in the private sector, or other than what covered above. 15,000 has now moved to 20,000. 194I rent, 2,40,000 per financial year. It has moved to 50,000 per month. There was some confusion because the finance minister did not understand the income tax provision, and therefore she said 6 lakh rupees per annum. It's not that way. It is 50,000 a month. So supposing if I'm got in February I start giving rent and my rent is 70,000, I need to deduct rent even if the total is 1,40,000 rupees. Okay, so it is 50,000 per month. 194J professionals, 30,000. Now it has become 50,000 rupees. Enhanced compensation. So there is compulsory acquisition of property by the government. In that case, 2,50,000. Now it is 5 lakh rupees. No TDS is to be deducted for Section 96, right to fair compensation. There is an exemption notification which says that if your land or property is acquired under this section, then there is no, it is fully exempt and there's no taxation on it. Today, majority of the states have acquired property under this head so that there is no taxation. However, one should read the attachment or property acquisition order before you go for this particular exemption. So there was 206 AB, which provided that if you have not filed your return for 2 years, in that case, the TDS rate would be doubled. You would have higher rate of TDS. Now that section has been deleted because there was a compliance nightmare for everyone. You had to, for each PAN number, you had to find out whether he's a non-filer, go to the utility, find out, and there was a huge concept of errors which was there. There were pensioners and senior citizens who actually did not have taxable income. They would get hit sometimes, though in spite of the fact that the system was trying to take care of it. So therefore, this particular provision has been removed. And now there will be no higher rate of TDS, except of course in 206 AA where you don't provide the PAN number or your PAN is not linked to the Aadhaar card. In that case, that 20% would continue. Then you have a few cases where there was reduction of TDS rates from 1st October 24. To quickly go through them. Payment in respect of life insurance policy. Earlier it was 5%, now it is 2%. This particular amount is actually a cost to you because majority of the policies taken earlier are now maturing. There shouldn't have been any TDS because they were not taxable. However, you need to maturity of each policy they deducted. You have to see whether it is exempt or not, claim that exemption and claim the refund. So they've reduced the rate from 5% to 2% so that the harassment is that much lesser. Commission on sale of lottery tickets 5% to 2%. Commission and brokerage 5% to 2%. 94H. Payment above rupees 50,000 per month under 194 IB. This is different from rent under 194 I. When you have take a property as an individual or HUF and you are paying a rent on residential property of more than 50,000 rupees, you are supposed to deduct TDS. We'll be discussing this at a later point. I have a slide separately for that. 194M, where an individual makes payment to a contractor, commission agent, or a professional at above rupees 50 lakhs, sorry, 5% to 2%. 194O, payment of e-commerce operators, it has been reduced from 1% to 0.1%. Going ahead, 194IA talks about TDS on purchase of immobile property. There, of course, the understanding was that it is qua the property, but there was some interpretation to say that if two people are being paid 40 lakhs, I need not deduct TDS. Now they've clarified to say it is qua the property. So if the property value is more than 50 lakh rupees, you need to deduct TDS. Salary and interest to partners. Now, this is something which is going to cause a lot of harassment to all these smaller firms, partnership firms, LLPs, chartered accountant firms. The government wants you to be disciplined as a listed company. Prepare your accounts before 30th April. We'll be discussing it in due course. First of all, there is a enhancement of salary that can be paid to partners under 40B. Now 40B is a disallowance section which gives you an allowance. So 40B is actually a disallowance section which says that if you pay salary up to this much, it is allowed. Above this, it will be disallowed. Here they've increased the limit up to 6 lakh rupees. You can pay 3 lakhs or 90%, whichever is higher. On the balance, if you pay 60%, that would be allowed as deduction. The same applies to LLP also. LLP, it is applied based on the fact that Section 223 defines what is a partnership firm. They've included LLP in that particular definition, and therefore LLP has the same treatment as a partnership firm. I have given the definition over here. I'll not read it because I have lack of time. I have come to complete a lot of this thing. So you have a definition of partnership. You have a definition of partner under 223, which includes both LLP and partnership firm. Going ahead. You all are aware of this. So I'm not doing something which you are not aware. This is like relearning whatever you've already known. I'm thankful to the institute because I had to go to the entire TDS sections once again. And it felt like an CA exam, but it was fun. So, salary payable only to working partners as per the partnership deed provision, and it can be paid only after the date of amendment of partnership deed. So from the date of partnership only you can pay. It is important that the minimum salary and maximum salary is specified in the partnership deed. This is based on the concept that in 739 circular 1996, they had said, CBDT has said that each partner share should be specified in the partnership deed. So besides the fact that you should specify that who are the working partners, minimum salary, maximum salary, and what is the ratio in which the maximum salary is to be distributed also should be mentioned, because the circular clearly says that you need to mention the each partner's salary which should be workable in the partnership deed itself. As per auditors 3CD report which you file under clause 21C, you are supposed to give the amount and the calculation of salary. So you should redo it in a manner where you were able to certify that. Similarly, interest maximum is 12% simple interest. One should understand that it is simple interest. So you can't say I will pay 12% on the opening balance and then you have someone withdrawing the capital balance during the year. So it has to be simple interest based on the calculation of partners' capital on a day-to-day basis. New section 194T has been added. It applies from 1st April 25. Actually, it was supposed to apply in the previous year. Representations were made that will become difficult, and therefore it was shifted to 1st April 25. The aim is to broaden the tax base. Intention is to collect tax at the earliest point of time. So if I'm paying salary to the partner, there's no chance that that partner is not going to pay taxes, but they want the tax at the earliest point of time through a TDS process so that the tax collection is greater. It leaves us a lot of all of us with a lot of difficulty. We'll discuss about it. The section 9.94T is a step geared towards greater transparency, and basically it does not want you to do any tax planning. Applicability, salary or remuneration, interest on partners, commission and bonus. Tax rate is 10%. Limit is 20,000 for all the partners put together. TDS is to be deducted on a monthly basis if the salary is paid monthly basis and paid before 7th of every month, except for the month of March where it will be 30th April. Quarterly returns on 26Q is to be filed. TDS compliance to be reported in clause 34 of 3CD, besides 21D, which I specified earlier. You should have a robust accounting system, because you will have to bifurcate the withdrawal into capital. So of course, items like capital repayment, drawings, withdrawals, profit sharing are not to be put part of TDS. Interest and salary to partners in majority of the micro, small, medium firms is an exercise done just before filing the return. If it is 31st July, it is 31st July you are doing it. If it is 30th September, you are doing it somewhere in 15th September. So if today you have to pay TDS on that, you will have to complete that exercise at least by 30th April. So if by 30th April 26, you are not able to decide what is the income of the partner and what is the income of the firm, you will have a lopsided situation where either you will pay 30% by giving less salary in firm, or you will pay more taxable in the partner's account. So that planning which was there, which was being done at the last moment, is curtailed by this particular TDS provision. and you need to have a robust accounting system, there'll be going to be a huge cash flow issue. So if you constantly withdraw, what happens in normal cases is that the partner keeps withdrawing amounts. Now you have not bifurcating into salary, partners capital, or at that particular stage. However, with the TDS provision, you will have to have a fixed system where what is part of a salary. Now, if it is withdrawn certain amount and there is no capital, there'll be another issue about 3613 and the interest if it is to be payable under by the partner for a debit balance. So therefore, one will have to organize, plan, and see that the accounts are ready. There is a bifurcation of what is the monthly salary, what if there is no profit, and what if there is profit. Okay. However, you can have a situation where if you have enough capital, keep withdrawing and pass a salary entry at 31st March if the facts provide for that. However, that salary also needs to be provided that in a manner, because your individual rates at 35% and your rates in the partnership sometimes are lower if you have a high net worth guy. Now, can I give 15G or H? The answer is no. They've left that door closed by not including this particular section in 197A. Can I apply for lower TDS under clause by filling form 13 under 197? The answer is no. They've closed that door. This shows their resolve to collect the tax at the earliest point of time, whether you like it or not. Yeah. Coordination with partners and compliance. I think I've already said that you need to. So in a bigger partnership firm, sometimes the partners have their own accountants. It's not that always the partnership accountant is their accountant. You will have to ask him how does he want to plan this thing. You need to coordinate. You need to file a form 6. You need to have to give him form 16A. Any lack of coordination, you will have less than optimal tax payment. CBDT has not left a door open to say that they'll issue any clarification. So like if you look at 197, 194S, 194O, they have left a door open to saying we'll issue a clarification. Now here they've not left that door open. They don't want to give you any clarification. Whatever is the law, implemented. Important thing, there is one section 84 which says that if a partnership firm has to be assessed as a firm, in that case, there should be a partnership deed in writing. This is a section which is long forgotten by many. That's why I needed to bring it to your notice. The profit sharing ratio and loss sharing ratio should be specified in the partnership deed. Partnership deed has to be attached. That's an old section. Now you don't have to attach it because every process is online. However, the clause 5 is very dangerous. If there is an order under 144, this section gives the assessing officer power to disallow salary and interest to partners. So that is the main reason I brought it to your notice. If there is an order under 144, so assessment 144 order happens when you don't comply with notice under 143.2, 142.1, or you don't get a special audit done under 142.2A. In that case, a 144 order is passed, read with 143.3 or 147. In that case, they have the right to disallow salary and interest. As of today, this is not happening because majority of the assessing officers also do not know this section. Otherwise, this is the law as of today. Going ahead. So for 194T, the concluding is you need to be very efficient with your accounts. You need to see that you have the partners' finances also in place to decide before 30th April what is the salary to be paid and what is to be taxed in the hands of the firm. Going to TDS on works contract, this also there has been a minor amendment in this also. That's why I've taken 194C and 194H. This is a section where there has been constant complications. There are some more than 10 circulars which the department has issued for various clarifications. And it covers majority of the business TDS compliances. So any person who is paying to a resident, that any person includes all these type of the central government, local authority. One important part, I marked it in red, any government of a foreign state, foreign enterprise or association or body established outside India. So if any foreigner comes to India and he gets certain works contract done, in that case, he needs to deduct TDS. He needs to take a TAN number, file the 26Q. That is what I wanted to bring out. It covers all types of entities except for one where your turnover is less than 1 crore in a business entity, and your profession, if you are doing profession, less than 50 lakh rupees. In that case, you are not covered by this. Everyone else is covered by this particular provision. What does it cover under works contract? Now we've done this for horses number of years. I just wanted to put it as a compilation over here so that everybody could use it at some point of time. So advertising, broadcasting, and telecasting. However, if there is any technical services when I'm doing broadcasting, so if there is a content writer whom I'm paying, I need to pay it at 194J, not under 194C. There's a controversy which we'll be dealing at a later slide. So, sorry. Carriage of goods goods or passengers. There is this concept of if I have less than 10 trucks and I give a PAN number, there's no need for TDS. Catering services, providing food and beverages, except for hotels. So if you go to a restaurant and buy food, that is not covered. However, otherwise catering services. So if there is a caterer which is going to serve you food today, that caterer's TDS has to be deducted. Okay. Manufacturing and supplying a product. Now this was added later on in 21, where they said that if you manufacture goods based on supplies given by the client or based on his associates, product purchasing it from associate, then that would be works contract and TDS has to be deducted. However, if the purchase is through an independent party, no TDS is to be deducted. Supply of labor is also covered. It specifically has now excluded items under 194.1, 194J1. What was happening was there were Calcutta High Court and a few other high courts which was saying that if you have deducted under 194C some rate of 2%, then if the department view is that 10% should be deducted, no disallowance under 40A IA should be done. Now, that was the problem because there were certain high courts which are saying there is a TDS deduction. It is not non-deduction of TDS, and therefore there is no need for consequences of non-deduction. So to cover these judgments and to avoid confusion, because they said that what is covered under 194J, you do not cover it over here, because this is a works contract in a broader sense would cover service contracts also. Okay. We'll be discussing it as we go ahead. So is required to deduct tax at the earliest point of time, either on due basis or payment basis. Even if you put it into a suspense account, TDS has to be deducted. Rate is 2%, 1% for individual HUF, 2% in case of others. Subcontractors also TDS is to be deducted. If there is no PAN, then 20% TDS rate. Or if it is not linked to your Aadhaar, then also 20%. Exemption from TDS. So there is an exemption limit of 30,000 rupees for a single bill. Cumulative bill is 1 lakh rupees. So supposing I have 5 bills of 28,000 and it goes to 1,12,000 in the 5th bill, do I deduct TDS on 12,000 or 1,12,000? You are supposed to deduct it on the entire 1,12,000. You are already aware of it. I'm just revising this, nothing new which I'm talking about. Payments made to individual and exclusive for personal purposes. So supposing on my individual self, I want to build a bungalow in Lonavala or Khandala, that is my personal contract. Do I need to deduct TDS? The answer is no. It is for my personal purposes. It's only when you do it for business that you need to deduct TDS. Payment made to a contractor engaged in business of flying, hiring of leased trucks. If you take a declaration that I have less than 10 trucks and a PAN number, in that case, no TDS is to be deducted. However, this should be uploaded in 26Q. I'm very clear. So if you have not uploaded under 26Q, it can create a problem. So you should disclose the non-deduction because of this declaration in the 26Q also. Payment made purely out of contract for sale of goods. If it's a sale of goods, no works element. Payment to contractors who have obtained a lower TDS under 197, and payment made to passenger travel for airlines, no TDS. Circular 713 of 1995. Significant amendment brought from 1st October. They say that 194J items should not be covered over here. There were issues where there was one view at one point of time where the department said that since it is covered in both, you deduct 2% and 10%. And therefore, the department had to come out with a clarification that it can be covered under any one section and not both the section. That circular of 720 in August 1995. The amendment removes ambiguity. Now you need to be more perfect and you need to find out whether it gets covered under 194J or C. And if there is any doubt about it, cover it under 194J, deduct more tax. Reimbursement controversy. So there is this concept of reimbursement. You have clearing agents. When you import goods, the clearing agent takes transport charges, he takes terminal handling charges, he pays custom duty for you. If there is an some other charges, he pays all those charges, makes separate bill for those charges, and per container he charges some commission fees, which is a separate bill. Do I need to deduct TDS on the entire amount or only on the commission basis? You have a direct judgment of Bombay High Court where it say that the clearing and freight charges, if those bills are in the name of the company and that fellow is deducting TDS, the liability does not come to you. You can deduct only on commission which you are paying to the clearing agent. The concept of reimbursement. Similarly, you have a case where you have film productions. So in film productions, you have to make small payments for plywood, for repair, all those cases. So a director or a producer doesn't want to get into those details. So sometimes what happens is he appoints a contractor, he is given money, he pays to all those guys, and you pay a commission on that guy, and you deduct TDS only on the commission, not on the entire amount, because that fellow is supposed to deduct TDS on those amounts which he's paying. So therefore, is that allowed? The answer is yes. You cannot add it to me. If it is pure reimbursement and that fellow has deducted TDS, bills are in name of the main person. In that case, there's no need for deduction of TDS on the entire amount. You have this Inspire Films Limited, where there was a cashier appointed. That cashier was given on an IOU basis a certain cash amount, and he was paying various as petty cash. Now the department said that total amount is higher than 10,000 rupees. You should have, when you paid to that particular cashier, you should have deducted TDS. The High Court has said that no, there's no need to do deduction on these amounts, and wherever it was required, deduction is being done. However, one needs to be careful. Sorry. One needs to be careful. You have ACC Limited, Supreme Court, where ACC was paying reimbursement of labor charges to the contractor. So the ACC had bifurcated that the contractor's labor, whatever he's paying, I'll reimburse it, and whatever is the margin, I will pay it separately. There the Supreme Court said nothing doing. The entire amount has to be taken as one figure, and TDS should have been deducted on it. So you cannot bifurcate this. So if you are a chartered accountant for audit, I say that traveling expense, I'm going to bill 10,000 rupees separately and 20,000 I'm going to bill for my professional fees. That cannot happen. The consolidated figure has to be taxed. However, one needs to understand what is reimbursement and whether TDS ultimate has been done or not. Similarly, you have Dabur India, where there was a contract to print corrugated boxes with label of Dabur on it. So the department's contention was that this is a works contract. The answer was no, it is supply of corrugated boxes. There's no need for TDS. Similarly, Reebok was giving job works for and giving designs to make clothes and shoes. And as per that, quality control production was done. Whether it is a works contract, the answer is no. Materials purchased from third party, only quality control and designs was given, and therefore TDS was not required to be deducted. Similarly, you have franchisee agreements where you take a fixed share of the profit. In that case also they said 194C does not apply. However, you now have a royalty concept where you are going to pay royalty under 194J. So it will get covered under royalty. That point of time, royalty was not TDSable. That's why it had gone under, not under 194C. Now it will get under 194J. I have hired dumpers, cranes. So does it make it put it under 194I, or is it works contract under 194C? If the contract is to transport goods, then you will get into 194C. I'm not hiring cranes. I'm not hiring those trailers. What I'm doing is I'm asking him to transport these goods. What he does, brings a trailer, brings a crane, is his headache, and therefore 194C would apply. Calcutta High Court CIT versus SK Tikriwal, which I was talking about. 194C TDS was deducted. According to department, it was 194J. However, no disallowance because TDS was deducted, was Calcutta High Court's view. However, now it will not work. Tax deducted under 194J. Yeah. So this is a complicated section. We've added various things the department has added. So any professional or technical services, royalty, non-compete fees, or director's remuneration you are paying to a resident, TDS has to be deducted. What is fees for professional services? Profession has been defined under 44AA under the Income Tax Act. There are various circulars where they've added IT professionals, they've added film artists. So those circulars are listed over there. All those are professionals. If you are paying them, that should get covered under 194J and not 194C. Similarly, you have fees for technical services. One second. You have fees for technical services. Exclamation 2917. Actually, you can have 2 sessions of 3 hours on fees for technical services. So in the 2 minutes, I really can't explain to you the difficulties which you're going to face in fees for technical services. There are some 7 or 8 explanations in 9.1 which need to be gone through before you decide what is whether fees for technical services. In any case, what it broadly means is consideration for rendering of managerial technical consultancy services. Excludes consideration for any construction, assembly, mining, or project undertaken by the recipient. And what is covered under salaries. It covers services involving specialized technical knowledge, expertise, or technology. Payment to contractors, call centers are also covered under this head. Royalty, as defined, and we'll take it up separately. Again, royalty is a disputed thing which we have done. We can go on for 3 hours about it. Non-compete fees, 28(5)(a). If you've received any non-compete fees, TDS is to be deducted over here. Director's remuneration not covered as salary. So if you are covering at salary under 192, it's to be done under 192. But if not, you are doing it as director's remuneration, then you need to cover it over here at 10%. Royalty, the definition is 916. Besides this, there are 3 other explanations. What is process? What is computer software? So if we go into that discussion, but yes, we should look at royalty as transfer of all or any rights in respect of patent, inventions, models, design, secret formula, or process. Informations concerning the working or the use of a patent invention, use of any patent invention, model, design, or secret formula, imparting of any information concerning technical, industrial, commercial, or scientific knowledge, right to use any industrial, commercial, scientific equipment. So if I take a crane to be used, does it get covered over here or under works contract is the controversy. So if I'm taking a crane which is to be to lift 50 tons, whether it will get covered, because right to use any commercial equipment gets covered over here. However, fortunately for us, they've reduced the rate to the same level. So whether you do it under 194C or you do it over 194J, the rate would come to the same at 2%. So therefore, there is no controversy. Earlier, there was only 10% rate. Therefore, this particular problem was there. Transfer of all or rights in respect of any copyright, literary, artistic, or videotapes for use in connection with television or for radio broadcasting. Rendering of any services in connection with activities referred to in 1 to 6. So any services with regard to any of these would also get covered. Software is a royalty. So if you are buying any software, you need to deduct royalty. The rates of TDS, there are varied rates, 2% and 10%. So technical services 2%, call centers 2%, royalty in nature of sale or distribution, exhibition of cinematography film 2%, professional services 10%, royalties 10%, non-compete fees 10%, directors remuneration 10%. If you do not have an Aadhaar linked PAN, the rate would go to 20%. Exemption from 194J. The limit has been increased from 30 to 50,000 from this year. Individual and HUF having turnover of less than 1 crore in business, 50 lakhs in profession. Payment by individual for personal purposes is not covered. Payment for which can be taxed under salary not covered. Payment for acquisition of software where there is a trading item. So there is a circular notification number 21 of 2012, which says that if you have acquired the software in a subsequent transfer, so supposing you have a engineer who gives you software of Windows, that engineer has not done anything with the software. So when he acquires software from Microsoft, he need not deduct TDS on that. You need not deduct TDS because he can give you a certificate saying that one, TDS has been deducted earlier, and the PAN, the declaration that TDS has been paid to the government. If that is done, there's no need to deduct TDS and royalty. Generally, when you buy these softwares, they give you a certificate in the bill itself whether TDS is to be deducted or not. You should check that before you deduct the TDS and pay it to the government. So ambiguity exists with regard to works and this 194J. However, with regard to equipment hiring, the rate is 2%. So whether you do it in a 194C or 194J will not make a difference. Problem arises because many services are classified as technical and are rendered through a contract. So even if I'm supposed to render an architect services, which is a technical services, I would have a contract of how to do about it. So people think that let's do it under 2%. It does not work that way. If it is a technical service, you need to deduct 10% and you should not make it into a 2% item. A lot of clients come to you by telling you, how do I get it into a 2% instead of 10%? Please do not do it. After 1st October 24, it will lead to all the consequences of penalty and disallowances. Advertising agency. When an advertising agency purchases slots in a newspaper or in a television, when they pay the newspaper or a television company, they are not supposed to deduct TDS. There is circular number 715 of 1995, which specifically says that on this there should not be any TDS. Going to TDS on purchase of property. If you have any questions, please raise a hand and ask me. I'm open to questions. It's not that maybe I'll not be able to answer it, but let's hear the interesting thought. TDS at a rate of 1% on property agreement of value of agreement value or stamp duty value, whichever is higher. I want to bring out that there is a misconception that I'm supposed to do it at agreement value. The answer is no. They've amended it in 21-22 assessment year onward. So today, if your agreement value is 1 crore and your stamp duty value is 1 crore 25 lakh rupees, you are supposed to deduct TDS on 1 crore 25 lakh rupees or not on 1 crore. Okay, so you have to do it at a higher value. The TDS is qua the property. So therefore, if you have the example which I give, if you have two people of 40 lakhs, do I need to do TDS? Yes. Now the clarification makes it amply clear. Earlier also, the view was that it should be qua the property, but in any case, they were not taking action. So you did not have any much of a problem. It is important that you verify the PAN. So I come across this very often, that the PAN of two people are there and the mother's PAN is not linked to the Aadhaar card. So if you, as soon as you fill up that TDS, you will get a liability of 20% plus the interest. So therefore, and the whole transaction goes into jeopardy because that fellow is not going to allow you to deduct 20% from your transaction. If the transaction has already happened, you are in a worse off situation because you are supposed to pay that liability. I don't know how you will do it. So one of the ways in which we did it was that if the mother and the son's PAN were there and the son's PAN was valid, so we shifted the entire TDS to the son's PAN and saying that we paid only to the son, taking a declaration and relevant documentation to see that that liability does not stick on. However, if it would help you in a great manner if you were to check the PAN beforehand. Okay, if the client comes to you. Generally, these clients come to you only after the transaction is already done. In that case, you will not be able to do much. But if they come before, then you can plan it out to see that the PAN is checked. You also should verify whether that opposite person is a non-resident. Now, this is something which is happening very common where non-residents do not want a higher rate of TDS, and therefore they'll give you the PAN number and also the Aadhaar card, and you deduct it at 1%. Is it correct? The answer is no. If he's a non-resident, the TDS rate is 20% or 12.5%, depending on the date of transaction. You need to deduct it at that rate, or he needs to get a lower TDS certificate. So therefore, before a transaction is done, you should take a PAN number, take a declaration that he is a resident, so that you are able to process this particular TDS requirement. You don't need to take a TAN number. You can file it under 26 QB. Be very careful when you fill out 26 QB. It's a detailed transaction. Any mistake in the 26 QB, you will have to go back to the assessing officer. It's an online process where you have human interface. Okay, compulsory human interface. Okay, so and it can be very enjoying, as you are aware. So 194 IA TDS on where there are more than one seller and you have more than one buyer. In that case, what do I need to do? Do I need to deduct TDS twice? Yes. So if you have two buyers, deduct on both the TDS and pay 226, file 226 QB. You have two sellers, two buyers. So you have husband and wife buying another husband and wife's property. What do I do? Do I need to, both the husband and wife need to pay both the guys? No. You could organize it in such a manner that one person pays to one person, the other person pays to other person's right, and you have to file only two. Of course, there is another view that you should both. So if you go to a lawyer, he'd say, no, everybody should pay to everyone. So husband will pay 50% to both the guys, wife will pay 50%, so that my right becomes more firm. I have done this with a solicitor and he said, no, you do it this way. So then in that case, you pay you file 26 QB and you see that you don't make a mistake in any of those 26 QBs. Okay. So you need to file 4. Yeah. Whether if I'm buying a lease property, do I need to do TDS? The answer is yes. With the new judgment of the Nagpur bench of Bombay High Court, where they've reversed all earlier judgments, land and building and both includes right in land, building or both. Okay, so the Bombay High Court today has said that all those old judgments are out. This is the new judgment. Vidarbha Veneria. This is a recent judgment of 2025, I think, where they've held that even on tenancy properties, 150C applies. Okay. Coming to TDS on rent paid for residential properties. So when it applies to individual and HUF, if you are paying rent of more than 50,000 rupees, you need to do a TDS at the rate of 2% now after 1st October 24. Now the controversy in this, you don't have to take a TAN number. You have 26 QC which you need to fill up for this, where you can fill up the details. However, the controversy was if 1st October is the deduction, whether I do 2% or 5%. The law provides that deduction of TDS under this section is on the last month of the financial year, or it is when you are vacating the last month of the tenancy. In that case, your liability to deduct TDS only is on 31st March. Okay. If it is at that point of time, the tax rate is 2%. Now, there is a view, or some people have already done, they've deducted 5% out of abundant caution. The problem is the opposite side is able to see only 2%. Okay. And when you go to the assessing officer, he tells you take refund of the 3%. Now, you know how difficult or easy it is to take a refund from the department. So therefore, you should look at the law and deduct only 2% is my view. there could be a different view, but according to me, it doesn't, the credit also does not go to the other guy, even if you deduct. Yeah. Any questions with regard to anything which I have done till now? Yeah. 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 So, yeah, sorry, I missed it. So, unlike in 194 IA, the language of the section says that if I am have three people and all three people I am paying 40,000, I need not deduct TDS. Okay. The language says that it is to be when you are paying to a person as rent, that person's TDS has to be deducted. Unlike in 194 IA, which says that if you are purchasing a property and the value is 50 lakhs, the language gives you the advantage of not paying TDS, but it does not to each guy, does not go 50,000 or more than that. Yeah. Yeah. No, so if you are deducting for each person, you'll have to file. So if there are three people, you're each of them you're paying 50,000 rupees. For each of them, you'll have to file 26 QC. Three of them. So number of people. Yeah. So if you're paying only to one, then you deduct it from that whatever you're paying. So 194 IA and 194 IB, it is at the point of time of payment. Deduction, of course, it says credit or payment, whichever is earlier, but in these cases, no credit entry is put in the books of account. So therefore, at the point of time of payment, whom are you paying? If you're paying one person, deduct it from that. So even for 194 IA, where I was talking about mother and son, which is a recent thing, which the deal had happened, we deducted TDS, and he did not see it because he was a salaried guy. He did not really look at his accounts, income tax side, and suddenly he gets a demand notice saying that he needs to pay further few lakh rupees on that particular 20%. Now, that was becoming too much. So that whole deal would have had to be reversed. Ultimately, it was decided that originally also the property payment was done by the son, and the property actually belonged to the son. Mother's name was only for namesake purposes, and therefore we shifted the TDS to the son's account, and therefore that demand get reduced or got nil. Okay.
Hello. Good afternoon. Myself is Jagdish Tarvi. My query is regarding section 194J. While making payment to the OC applies to J. If it is without any supporting document or with supporting document.
So no lawyer is going to give you any supporting documents. First principle in life. So if he tells you that I've taken 500 Xeroxes, you pay him for that 500 Xeroxes. Okay. So according to me, the entire bill will have to be go under 194J 10%. You cannot bifurcate it separately for 194C and 194J unless he gives you a separate bill. I know of law firms and lawyers who give you a consolidated bill and they tell you deduct the TDS on the entire amount. However, if the lawyer is stingy and he says, no, give me, I will give you separate bill for 194C, and then do it that way. Okay. So if there's a separate bill for Xeroxing and all that, deduct 194C, and on his professional services, you deduct 194J. That is possible if the bills are separate. But in the same bill, you have Xerox charges, you have taxi charges, you have clerk charges, deduct 10%. Do not get into bifurcating in the same bill 194C and 194J. Generally, lawyers will not bother. They will say that you deduct 10% and close it. Okay. And there cannot be any documentation to that effect. So if you want to, there was someone who said that I don't want to deduct because this is reimbursement. Can I do it? The answer is no, because the lawyer is not going to give you the Xerox bill. The lawyer is not going to give you the clerk bill. The lawyer is not going to give you the separate bills for each item. which is making it difficult for you. So there is no reimbursement. Please deduct TDS. I think there's a case law also. I might be taking it further in my one of my slides. There is a case law that it has to be done at 10% on the entire amount. Yeah. No, stamp duty, there is no TDS on that. On stamp duty, that is a government charges which are paid. So on stamp duty, do not deduct TDS when you pay it to the lawyer. Okay, they generally take the stamp duty in a separate account as per the bar association's guidelines. They are supposed to take the stamp duty in a separate account and pay it and give you the stamp paper. So there is no TDS. Yeah. No, it is not a settled law. So the practical difficulty which I told you is there are people who filled up to 194 Cs. For 1st April to 30th September at 5% and 1st October to 31st March at 2% and filed 194 ICs to be on the right side. But what is happening is when I have deducted 5%, but on the opposite sides, 26A has only 2% is seeing. So technically they are telling you deduct 2%. Now, when we went to, because this was a big amount and it involved very senior people, they told us find out what is to be done about this. And the officer has actually said you apply for refund for that 3%. Can you imagine for 3% if I have to go for a refund, it will be my fees will be more than the refund itself. No. There's no way of taking a credit. I don't know. Someone. So so I'm not an expert. You have a session after, I think in 2 o'clock. My learned friend over here also says there is no way of taking a credit. I went to the officer. He told me take a refund. So each officer has its own views because this is an individual TDS which you have done. Okay, there is no TAN number. So you have done under the PAN. Now, I don't know how you will take credit of that. Unless you want to utilize that 3% in the next year. That also I don't know. I don't file many TDS returns individually on my own. My staff does it, so I don't know. You'll have to ask the next guy who's there. Yeah. Yeah, that's a good question. So you need to give the challan, you need to give the agreement, you need to give the bank statement from where the payment has gone. You need to give an indemnity bond. We've just done the process, therefore I know about it. Indemnity bond, and you need to make the officer more than 5 times. Yeah, PAN Aadhaar of both the parties. Xerox of PAN Aadhaar of both the parties. Huh? No dues, I don't think they were asking. They're asking you an indemnity bond and an NOC from the opposite party that he is okay. Yeah. Yeah. So once you go to him, your life is fantastic. So he'll ask you to pay all the defaults first and then come for a refund. So I know of a chartered accountant who had gone for lower TDS and had come back with 1 crore demand. And I was handling the appeal. So you need to be very careful when you go for TDS lower deductions also. Yes. It has to be on a 500 stamp paper. You please take the draft from him. So if the draft is not proper, he will make you do it again. So the draft has to be taken from the department. Yeah. 194P. This is a very obscure section. It is for senior citizens. So if there is a senior citizen who has a pension and only interest income, in that case, he can approach a specified bank and tell him that this is my details of income and you deduct the TDS at the rates. And if that bank does that, in that case, he does not, the senior citizen who's above 75 years does not have to file a return of income. However, the difficulty in this is that his interest should be coming from only one bank. Okay. I've dealt with senior citizens, they have account in every bank possible. So uh, uh, I think that's a favorite pastime. So after retirement, what do? You go to each bank and put an FD and try to get the passbook filled. So I'm sorry, it was on the lighter side. But you need to, the difficulty is if this section is properly amended, then it could really help a lot of senior citizens to avoid filing returns. Because in this case, again, if I have a refund, because now the limit is 12 lakh rupees, a lot of these senior citizens will have a refund on the TDS, which is deducted on interest. In that case, this refund, you will have to file a return again. So at least after 75 years of service to the nation, we should have some method whereby they don't have to file a return of income and get boggled when they get a 143(1) with a demand, which generally happens with senior citizen returns. If there is a 26 years, they get really petrified by the fact that they've received a notice. So something needs to be done. If this section is amended in a manner where all incomes could be disclosed to the one bank and he deducts TDS and there is no return filing, I think it should really help a lot of the Indians who are filing returns only for this purpose. Yeah, sir. Yeah, it'll help. It'll help. Under the new system, interest would be you have a substantial interest, so that if you are having less than 12 lakh rupees, that would get a refund, and TDS will be deducted. So unless of course 15H is given or is given, and they don't deduct it after 15H. So banks can be really miss out on that or something like that. Yes. Yes. So you are talking about 7 lakhs. I know of a bank which tells my client that no, uncle, इसमें 2.5 lakh से ऊपर है, इसलिए I cannot accept your 15H. So the language of the form is such that it says that if your maximum amount is higher than the exempt income, then the amount is 2,50,000. It is with rebate, it is 7 lakh rupees. So they say that we are going to deduct TDS and you go for a refund. So this is a difficulty which is being faced by majority of the senior citizens, and filing a return for them is a headache, like for all of us. But we are younger, so we take it in our stride. But for them, it becomes more difficult. Yeah. 26Q. Now I don't file 26Qs, but since it is part of this, I have taken it up. So if you ask me a question, I'll have to refer it to the next guy who's going to take it up. But this is, you need to file, this is the most important thing. So section 200 requires you to file a quarterly TDS return. If you do not file, all the consequences will follow, which I'll tell you. And you will have to file in the proper format. You need to take the income tax utility or a private utility, and all these sections TDS is deducted. You need to fill it up. You need to see that your TAN number is active and proper. Take the PAN number from each guy. After deducting the primary responsibility is yours to file up that particular return. You are as equivalent to a Bandhwa Mazdoor with regard to these TDS returns, because if you don't file, you will be penalized, you will be prosecuted, and trust me, they'll harass the life out of you. So you need to do that. The process is you need to file your TDS returns, see that the challans match. After depositing the TDS, when you now, of course, the life is easier because it's an online payment of challan. Earlier, what used to happen is you give a challan on 15th, he will stamp it on 15th and then fill it up on 17th. So when you write 15, you've paid 5 lakh rupees, you will not get credit because there's a date mismatch. Okay. Now, this is a problem which if you have not solved before 31st March, they will start demanding money for that challan mismatch also. We will be discussing it at a later slide. Okay. So you need to deposit the TDS due dates. I think this is a TDS session, so you must have got the TDS due dates by now. I'll not waste my time. you need to prepare an FUU, you need to upload it and see that everything gets processed properly. There you can file a correction statement. General errors are incorrect PAN numbers. Sometimes you punch it wrong. Sometimes the PAN number is received on the phone, you don't have it. There is a section code mismatch. There's mismatch of amounts. You have paid 5,056 rupees. You write 5,065. There'll be a mismatch. You will not get credit of the entire 5,056. Errors in challan details which is being filled up, incorrect reporting or lower TDS. There is a certificate number. The certificate number is incorrectly written, not matching with the system. You will get a demand. So all these corrections can and need to be made. Now, what has happened is in the last budget, they've said that if you have any errors in these particular returns, I will not allow you to rectify it after 6 years. So now today, anything of 99, 2000 and earlier, you cannot rectify. So if you go to your traces website of any of your clients, and if there are old demands pending, and in spite of the fact that those demands are incorrect, because as I said, there's a challan mismatch, you have paid it the amount, the credit is not seen, they will say that now we will not allow you to rectify it. They are today not allowing you to rectify it and wait till they come and collect the amount, which is going to very soon start. As soon as the slowdown hits them and the revenue starts falling, they will start looking at all sorts of revenue sources, and this is a fantastic revenue source, all those demands which are there. So today if you pay late fees, so supposing there is a late fee of 5,000 rupees and you've paid that late fee, after you pay the late fee they'll tell you interest of 1,000 is pending. Okay, they'll raise an interest on one lump. Now so this is something which is late free interest is not part of any section. First of all, late fee is something which is according to me criminal, but to charge interest on late fee, so the interest section talks about tax, interest or penalty. You yourself are saying that late fee is not penalty, but you want to charge interest on that late fee. So this is a reality. As of now, we are not paying interest on late fee, but yes, in due course, they are going to collect it from you. Okay. So consequences of non-compliance. You have a disallowance under 40 AI. 30% of that expenditure would be disallowed from your business income. Okay. In the year in which you pay, you will be allowed as a deduction. No disallowance if the payee has paid the amount. So this was brought in 2000 section 201 proviso was amended. They added that if the payee has paid the tax and form 26A is certified by his chartered accountant, in that case you need not collect the tax again. This was based on the original Supreme Court judgment in Hindustan Coca-Cola, where they said that if the payee has paid, you cannot again collect it from this person because the payee has already paid the tax. So therefore there is recently a judgment. I was not able to trace my hands on it, but there is a judgment of the tribunal where, in spite of the fact that 26A was not available, based on the fact that the opposite person's return was made available, they had allowed the proviso saying that 26 you need not pay again. So there are judgments to that effect also. 26A would help, but if it is not there, it's not the end of the world. If you are able to get that the taxes are paid, then it will not harm you. Yes. That is fine. The only criteria should be that he's taking that income, a letter from him that he has considered that income in his return of income. No, there are judgments the other way around also. So there are tribunal judgments other way around also. It is not necessary. So your NBFCs. So I was handling a few cases where payment was made to NBFCs. The TDS was not deducted on it. And because the client felt that it is a bank, so he did not deduct it. Later on, we realized that it was there. Disallowance was done. We went in appeal. NBFC always has a loss. So They had a loss return, but they gave me a letter saying that we've considered that this income and whatever tax, if any payable, was paid on that. So that was sufficient. CIT appeal itself allowed it. So if we'll take it offline, I'll give you judgments to that effect. There are a lot of judgments which say that the tax, he has considered that income and paid tax on that. Yeah. You can try it. I have not tried it with regard to the buyer's TDS on the buyer's side, but yes, 201 again. So what happens is 201 refers to 200 where return is to be filed. Whereas in this case, when you are buying 194 IA, you don't actually go into TAN number and do it. So we'll have to look at it, but yes, you can try it. I have not tried it personally, practically. Yes. So it refers to 200. So the power comes under proviso to 200. Now, if there is no TAN number and no 200 and no 200 and subclause 3 return, there is no question of you getting into the payee has paid tax. But yes, that is a fundamental argument from Hindustan Coca-Cola that the opposite side had, the purpose of TDS is that the tax should be paid. Okay. So that person was paid tax and therefore it should not be collected. And you can get a declaration certified by their chartered accountant to say that it is paid. Yeah. The section originally had 100%. This is all old stuff. Yeah. Failure to deduct TDS, 30% will be disallowed. Failure to deposit TDS also. Yeah. So you have time till the due date of filing return for deducting and paying the TDS with interest, of course. Paid and payable, this is an old controversy. However, it has been decided against. So I'll not got the condition. The controversy was whether the disallowance only has to be the 31st March payable, or it has to be something which was outstanding in the throughout the year. There were a view taken by a few Calcutta High Court and one other High Court saying that only the 31st March disallowance should be made and not the full year this thing. However, that I think has been reversed through this Allahabad High Court and Merrill Lynch, where they've said that that is obiter dicta and TDS should be deducted for the entire year. Consequences of short deduction. As I said, there are a few judgments which say that there should not be any disallowance for short deduction. However, you have Kerala High Court against you in case of PVS Memorial Hospital, where they said that even if there is a short deduction has to be as per Chapter 17B. Since the deduction is not as per 17B, lower TDS deduction would also lead to disallowance. You have interest and penalty. 2011A levies interest if you have deducted and not paid at 1.5%, and that 1.5% starts from the month in which you are supposed to deduct. So supposing I'm supposed to deduct in March, I have not deducted, I will pay the interest for March, April, and the month of June if I paid it in June. So all 3 months I'll have to pay 1.5%. Their calculation of interest is higher than what you would do in the normal day-to-day basis, on a day basis. You also have 234E, 200 rupees per day. You have penalty under 271H of 10,000 or 1 lakh rupee up to from 10,000 to up to 1 lakh rupee. They do not use this penalty. They are happy with 234E where 200 rupees per day and then interest on that 200 rupees. Then if they pass an order, you go in appeal, you will win that appeal. So therefore they don't pass any orders and penalty. Very few orders I've seen till now. So this is only academic. Yes. Prosecution. So yes, they can prosecute you if your outstanding amount is more than 25 lakh rupees of TDS and the delay is more than 60 days. As per 2019 circular, they will launch a prosecution. Nowadays, what is happening is Traces itself gives a list of these. So the officer has nothing to do. The list will come from the Traces website that this guy prosecution has to be launched. Why you have not launched it? Okay. So what is please understand, income tax prosecution, unlike normal prosecutions, are different. Under income tax prosecution, there is 278E, which says that it is presumed that you have a guilty mind and therefore you will be prosecuted and you will be put behind bars. Unlike in other prosecutions where the prosecution is supposed to prove that you have done the offense, here you have to prove that you have not done the offense for whatever reason. You have compounding also, pay and smile. The compounding charges have been reduced in October 2014. But yes, compounding is not a right. You will have to apply. If they like you, they will pass it. If they don't like you, they will not pass it and prosecute you. Okay. Yes, even if your order is going to come tomorrow, go to court, say I want to do compounding, they'll give you time. Okay, so but of course, as I was saying that it is not a right. They will consider prosecution based on each application. And of course, when you go to him, like he said, like someone was saying, first they will make you all the outstanding TDS will have to be paid. So if there is any liability anywhere, pay all that and then you can go for compound. Yeah. TDS on benefits and perquisites 194R. This is going to be taken by, how much time do I have? 10-15 minutes? Yeah. So 1:30 can I take? Yeah. Thanks. So this is something which we'll run it through. You are going to have a special session. I was talking to Prachi, so she is going to take these sections and in detail. So I'll do the basics before for just a preparatory for her. 194R was added. The logic of 190 in 22 194R was added. The logic was that people are not showing the benefits received by them, and that is being evaded. And therefore, they brought in 194R. Which says that benefit or perquisite, whether convertible in money or not, arising from business or profession. So if the dealer gets gold coin, that is a benefit. TDS has to be done by the company before giving that gold coin. If the dealer gives him a trip to Thailand, that money which he's paying to him for that trip to Thailand, TDS has to be first deducted before you give him that trip to Thailand. So therefore, TDS rate is 10%. Not possible to claim lower deduction under 197. They blocked this. Aggregate value is 20,000 rupees. So practically everything will be get covered. Person responsible for giving the benefit is supposed to do it. The exemption is for if you are lower than 1 crore turnover of business or 50 lakh rupees of profession, you should be a resident. All these sections which I'm doing is for residents. Should be resident when in kind, or partly in kind and partly in cash. Before parting with the item in kind, you should see that the TDS is given. So supposing there is a lottery for dealers and there is a Audi car to be given. So one guy in that lottery with the highest sale wins that Audi. Can the company give the Audi in the assurance that he'll pay the tax? The answer is no. He has to first pay the tax, show the challan, and then only, and that challan would be included in the 26Q to say that taxes has been paid by him, and only then the Audi car is handed over to you. Okay, so this is 194R. Power to issue guidelines. They have issued circulars. We'll be quickly go through them. Sorry. Yeah, so clarification in circular 12. Whether it is necessary that a person providing benefit or perquisite needs to check whether amount is taxable. So say, supposing I'm giving free samples to the doctor who gives it to needy patient free of cost. There is no income portion on that. Do I need to deduct TDS? The answer is yes, you need to deduct TDS. Okay. They say that 194R does not talk about any income. And therefore, whether you like it or not, the liability of 10% is there. It could be taxable under 28.4 or 141.1, or they refer to 194E. So in the clarification, they refer to 194E, where sportsman DDS of 20% was there, in spite of there could be a lower TDS in the double taxation agreement. So therefore, they say that since the section Supreme Court said in Pilcom provides for 20%, you need to deduct 20%. Similarly, they say the section provides for deduction of 10%, please deduct it. Is it necessary that the benefit of perquisite must be in kind? Whether judgment of Mahindra and Mahindra, which said that monetary considerations would not be taxable. So, will it be applied? The answer is they say no. That Supreme Court judgment is no more valid because the proviso specifically says that whether in cash or kind, you need to deduct 10%, and therefore please deduct teaser, because the proviso widens the meaning of the term. I do not agree with the logic that the proviso widens the scope of the section per se. However, this is a circular which is put before the Parliament and binding on you and the department, and therefore you need to deduct it. Is there a requirement to deduct tax under 194R of the Act when the benefit of perquisite is in the form of capital asset? The answer is yes. They refer to five judgment in the circular. There is a distinction between benefit received as capital asset and benefit from capital asset. So these two judgments really clarify that issue. So Priyanka Chopra was doing modeling for a particular Toyota car. So she was given a Toyota car in form of a benefit, car and a watch. She was doing it for a watch company also. Is it her income and TDS is to be deducted, though it is a capital asset for Priyanka, that car? The answer is yes. Tribunal judgment is against. The citation is there. Similarly, there was this Interglobal Aviations, Indigo. Indigo got benefit from a engine manufacturing company. So they selected a particular engine manufacturing company which was to be used in a plane which they were going to buy, and that engine manufacturing company gave an incentive to Indigo. Since the benefit was in the process of buying a capital asset which was in the capital nature and therefore not taxable. So this is the distinction between receiving benefit in the form of capital asset and benefit received in the process of earning a capital asset. Okay. So therefore, whether sales discount, cash discount, and rebates, do I need to give benefit? The answer is they say logically it is a benefit and therefore TDS should be deducted. However, because it will be very difficult for you, we are giving you benefit and asking you not to deduct TDS on sales discount or rebates. Okay. However, they bifurcate and they say that sales rebate should not include when a person gives incentive in the form of cash or kind in the form of cars, TVs. So supposing my client is a dealer in mobiles for Samsung. Now, as an incentive, they will give you free laptops. They don't want to give money. There are a lot of laptop stocks dying. So they give you free laptops. Is 194R to be deducted? The answer is yes, because that laptop is not a discount. However, if I'm buying 10 mobiles of say F24 series of Samsung mobiles, I'm buying 10 mobiles. So on 10 mobiles, they give me 2 mobiles free. Is it to be deducted? Is it 194R is to be deducted? The answer is no. Because you are getting something worth 12 mobiles in the price of 10 mobiles, it's a discount which is given. However, if they give you laptops with that 10 mobiles, that laptop, on that laptop, TDS under 194R will be deductible. Going ahead, when person sponsors a trip for the recipient, this particular amendment was basically to target doctor and pharma company nexuses. So what was happening was that there were certain tribunals and high courts which had said that the guidelines applies to doctors, pharma companies can do what they like, and therefore deduction is allowed in spite of the fact that this is violation of the Indian Medical Association's norms. Now, therefore, the government came down heavily to get in that 194R, saying that no, now you deduct TDS and let us identify who's getting what, and let's debar those doctors in that process. However, then after that, there is a Supreme Court judgment. Of course, after you got in 194, there was a Supreme Court judgment which said that all that those judgments were bogus, and this is to be disallowed to pharma companies also. Okay. However, today, pharma companies are facing a difficult time because they cannot give any benefit to the doctor without violating the Indian Medical Association norms. Okay. So free samples, trips for tickets to any programs, 194R applies. However, there is one difficulty. So supposing I'm going to a doctor in a hospital and I represent that I'll give you free samples. I give him free samples. Now, supply of that medicine is to the hospital, not to that doctor. So whose TDS do I deduct? Do I deduct it in the TDS in the name of the hospital or in the name of the doctor? They say that no, you deduct it in the name of the hospital and give. When the hospital gives those medicines to the doctor, if he's an employee, it becomes perquisite. If he's a consultant, it becomes taxable again under 194R. Okay. And they say that, okay, we'll not trouble you so much. We allow you to deduct it directly in the name of the doctors. I don't know which doctor will allow you deducts. They'll not give you your PAN number only. If you go to him, he said, don't give me free samples. Please don't take my PAN number. Okay. So it becomes difficult this way. However, they find their way, and we'll discuss it offline. Okay. So let's go ahead. Valuation. How do you value the market? They say that it should be at market value. If you're purchasing it, that should be the purchase value. 2 minutes. Yeah. And if it's not ascertainable, then valuation rule should be there. There are no valuation rules notified. Social media influencers. So if you are giving something free to social media influencer and he's not going to give it back, then 194R applies. However, if there is some item like mobile, car or something which is going to be given back after the influencer uses it, then there is no 194R to be applied. But I don't know, how do you give back cosmetics which are used by the influencer? I really don't know. So in any case, this is the this thing. Reimbursement out of forwarding expenses for consultant. So they tell you that if the bills are in the name of the company which you are representing, then there is no need to deduct TDS. If the bills are not in the name of the company and it is in the name of a consultant, then TDS is to be deducted. If you have a conference, it is for it should not be for leisure trip, or it should not have family members. If leisure trip or family members are there, that much portion you deduct 194R. Yeah. These are points to ponder on. Let's not waste time on this because it will take a lot of time to discuss. Yeah. Thank you very much. This is something which the other person is going to do at 4 o'clock, so I'll not leave it to her. Thank you very much for a patient hearing.
Thank you, sir. On behalf of WRC, I would like to express our sincere gratitude to CA Ashok Mehta, sir, for sharing his vast knowledge on the subject. Your session not only clarified several doubts, but also emphasized the importance of accurate and timely compliance. Thank you for sharing your expertise with us. We truly appreciate your valuable contributions and hope to have more such engaging sessions in the future. We now break for lunch and we'll resume sharp at 2:15.